What Alex and I are going to do tonight is have a Q&A. We're going to ask each other questions, both about our specialties. Alex can talk about house hacking. I'm going to talk about that as well, but more about passive real estate investing and how I help people invest in real estate, different investment strategies now, how we buy apartment buildings for good prices, and how we reposition them as well. Alex is going to focus more on the real estate agent side of the business, asking questions about buying properties for good prices and being a good real estate investor. Isn't that the plan tonight there, Alex?
Yep, absolutely.
Excellent, excellent. And we really encourage our attendees to write questions here in the Q&A. So I'm also going to put in the chat here to everyone, my website, peoplescapitalgroup.com, our website here where people can check out all of our information about how we buy apartment buildings, we reposition them, and we refinance them from max profit for our investor groups. So that's at our website there. And Alex, if you want to put your website as well in the chat, that's great. So our attendees can check out that information as we're chatting here. So Alex and I have a number of set questions we're going to go through. Okay, so we're being live streamed here. Let's get started on our questions. And Alex, so you know what? I'll start with asking you your set of questions here, okay? And we'll just get started here. So how did you get started in real estate, Alex?
Sure, thanks for asking. So I was a teacher, and this was about 8 years ago, and I kind of always wanted a little more, wanted to do more. I think I was a little bit bored. And I found the real estate and agent course on Groupon, and it was like $300. I was like, that's easy. And I wanted to be an investor. That's what I originally wanted to do solely. But I figured that it would help me a lot to be an agent, to learn the business. So I started doing it. And then there was another teacher I worked with that, he said he had his license and he was doing the 2 jobs. And he was like, I make really good side money. And I was like, I was just thinking that. So kind of everything, the stars aligned at the perfect time. And I went for it, and definitely floundered for a little while. Maybe wasn't with the right agency at first, wasn't getting the right support. And then, I switched to a bigger company, got some training, and it kind of just took off from there. I just got better and better. It became, more and more. And next thing you know, it's a full-time gig for me, and I'm investing and buying properties, and it all just kind of worked out nicely like that.
Awesome, cool story. No, that's great. I got started as a realtor as well. It really helped me get started in the business, learn the art of the transaction.
Yeah.
Meet investors that were buying properties for discounted properties. I was doing a lot of short sales, learn how to negotiate liens and things like that. So just, great experience working as a realtor. I built a team as well. So that's a great, I know you have that started as well. So that's exciting. Yeah,
yep, exactly.
Cool. All right. So how have you implemented house hacking?
Yeah. So one of the first things I did once I got my first few commission checks, I like I said, I was a teacher. My wife was working as a nurse. She's still a nurse. And, we didn't need the extra money. We were living off our salaries comfortably. So I just kind of decided I'm going to save all this commission, be disciplined. Of course, I'd love to spend it and go have fun. But, I figured in the long run, I'd be a lot happier if I saved it and built some financial freedom. So the first thing we did, we bought a 2-family house in Manville. Did it with an FHA 203K loan.
Mm-hmm.
So for those who don't know what that is, it's a renovation mortgage where they give you the money for the home, and then they also give you money to make repairs. So we bought like an old, it had good bones, but it was totally granny style. It was in that one family forever, and just it needed everything.
Mm-hmm.
So I'm sure we've all seen that kind of house. It had the wallpaper and old carpeting, things like that. So we gutted it and moved in, and we were really lucky. We had tenants from the beginning. My wife's sister was our tenant. So we still live in the first floor here, got tenants upstairs, and it's been just like awesome. You know, they help with the mortgage. We eventually put more money into the house, refinanced, and you know, got a better interest rate. So it's been an amazing experience. And then by doing that, I have low expenses, you know, because I have the tenant helping out with the mortgage. So it gave me the freedom to save up even more cash, which I, you know, have been investing into other properties that are strictly rentals for me.
Mhm. That's awesome. Yeah, absolutely. My wife and I, we lived in a two-family as well. That's what we did. We rented out the back unit actually on Airbnb.
There you go.
And yeah, so made some cash flow that way. It covered most of the cost of the house. I still, you know, in the wintertime, the heating bill was pretty high. So that ended up, you know, but for the mostly cost to cover the mortgage and tax and insurance, which is great. So, but I have to say on Airbnb, we did get some questionable characters now and then. So, and like sometimes people like come and knock on our door at night or something like, you know, so
Right.
I don't know if I would suggest that for everyone. It's kind of an acquired taste.
Yeah.
You know, I live in a single family home now, and there's something about privacy that you just don't get leasing, you know, your back unit on Airbnb.
Exactly.
So.
Yeah.
But that it was a great strategy and helped me get to where I am today and helped me build wealth. So that's what it's all about.
Yep.
So, and just to reiterate, so house hacking, of course, is when you buy a property. You could do it a couple different ways, right? I don't
Right.
think there's really one specific way. So you can buy a single family home, fix it up, sell it, move on to another one, kind of do the same thing again. And you know, that's kind of tough because you're kind of living in a construction zone at different times. But you can also buy a two family. You can rent out the other, you buy three family, four family, or up to four family, you get the residential loans, and you can rent out those units. And I guess that's really house hacking, right?
Yeah.
That's what most people call house hacking.
Yeah, exactly. We're not really doing the true house hacking. I mean, we will probably leave in a few years and then like keep the house as a rental completely. But yeah, I think that the true house hacking, like you said, it's like you're gonna live in this house, you know, fix it up, and then you're gonna move after a year, you know, because you were able to get a regular conventional loan because you're living there. And then you can do that again. So then you go in the next house and you move again. Now, we just didn't want to keep moving every year, and we love the house. So we just, you know, we're staying here, you know, for the time being at least. So it's kind of, yeah, it's kind of like house hacking, I guess from like or half house hacking, you know, from the true definition of doing it every year. But that's a lot of moving. I don't know if I could do that.
Well, yeah, you don't have to do it every year. I think it's more like just the strategy, you know, like
Right.
it might take 2 or 3 years to get to the point where you're ready to
Exactly.
sell, or, you know, at the same time, you also want to take advantage of living in the home and raising your family there for some time, you know, so kind
Right.
of maybe outgrow the home over time. But
Exactly.
yeah, so house hacking is just a general strategy to save money on your place you live, and ideally have another unit or two or three paying your housing costs. I know a guy actually that is investing with us, looking to invest in our next project, and we were talking about he has a four family and he's doing great
Yeah.
with it, with three other units. You know, you can
That's
still
the
get the
ultimate.
yeah, yeah, because you could still get an FHA loan with a 4 unit property.
You could put down 3.5% on a property that might be, you know, it could be a $600,000 four family. And then if you're renting out 3 units, you know, you're probably making money you're living there. So
Yeah, and you only have to live there for 2 years. That's
right.
the law, right? So after 2 years, if you outgrow the, you know, the condo or the space there, the unit, then you move into a single family home or a duplex, something like that. But
Right.
yes, it's really an amazing tool. You can get an FHA 203K for a four family, go even a level deeper, renovate
Yep.
it. You know, that's pretty cool if you're really hands on there, and so, you know, that's if you're aggressive with housing. I mean, 3.5%, you know, even for a $600,000 home, right?
Right.
You know, what is it? That's really not a whole lot, you know, 20,
Yeah,
$30,000.
20,000. Yeah. I mean, it's
Mhm,
for a house like that, it's a
mhm.
lot of leverage.
Your housing, your closing costs are going to be about equal to your down payment, you
I
know?
know.
So
I know.
yeah, so you pretty much need 6 or 7% really at the end of the day with
Right.
closing costs. But
Right.
you know, so but Yeah, that's great structure, great strategy. The FHA loan is a very good tool. And now I don't qualify for one because I pay myself through the refinance of real estate. So you do have
Right.
to fit in a box to qualify for an FHA loan and make it
Right.
W-2 income, which
Right.
is the highest tax form of income, or at least a really strong 1099 business going on. So with
Exactly.
large partner draws. But so that's the downside of paying yourself to refinance of assets. But we'll break into that in my part here. So let's move on to the next question. Why is it important to get your real estate license to help your investing career?
Yeah, excellent. It's such a good question. Like I said, I kind of always wanted to, when I first wanted to get into real estate, I wanted to invest. I wanted to do like fix and flips. But I felt like I was just lost. And, this is even, 8, 9 years ago, there wasn't even as much information out there as there is now. And, coaches and classes and things like that, and YouTube. So I didn't really know where to turn. So I felt like getting my real estate license was like, all right, I can take a course and then they'll have training and I can learn just like, because I didn't know anything about real estate. So like, I just needed that basic, like, this is how you buy, this is how you sell, these are the steps involved, this is what you need to know. And then I figured, okay, like from there, I'll have like that little bit of knowledge and then I can like, learn more about investing. But being an agent it just blossomed for me, and then I was just more into that. But then after a few years, that's when I really got into it more back with the investing and said, this is why I did this in the first place. So I got heavy into it. And since I've done that, I've noticed what an incredible advantage I have over other investors because I have my license. So first reason I would say is people bring me deals. So I get deals that other people won't because I, do all my advertising that an agent is going to do. And a lot of times I come across a house that, I could list, but it's in bad shape. It's not something maybe it could go on the market, maybe not. It depends. But either way, I'm like, listen, I could I could sell this house and make a $10,000 commission, or I could buy it myself and fix it up and sell it and make like 50,000. So it gives me that leverage that I come across these deals that other people don't because I'm an agent. I'm also always working with agents, and you better believe I tell all of them that I do flips. Everybody knows.
Mhm.
So when they have a house that, like say someone in my office that they are like, listen, I can't really list this house. It's in really bad shape. I can't put it on the market. They'll come to me, and I network. I know so many agents in the area and other offices, so they know like, all right, they can trust me, that I'll buy it, and they'll get their commission and they don't need to deal with the hassle of listing it. Some people don't want to list their homes
Yeah.
for various reasons.
Sure.
I see it all the time. They're like, I'll tell them you can get, 400 if you list it, or I'll buy it for 340. And they're like, we'll sell it to you for 340. And
Mhm.
it's like, you may think that's crazy, but like some people don't care about the money. They don't want to list it. They don't want people coming in. They don't want their neighbors seeing it. People have all sorts of reasons.
Mhm.
So that's the first thing, is just getting the deals. The other thing is the commission. Like I buy properties, I get paid. Like how many people could say that? So like
Mhm.
I get paid a commission to buy a house.
Yeah.
And then when I sell it, I'm saving half the commission. So
Mhm.
I'll pay a buyer agent as incentive to bring their buyers. But then when I list it, I don't have to pay my own company or maybe a small fee. Every agency is different with how they do that. So that's been fantastic, and it really adds up. If you're buying and selling a lot of properties, why wouldn't you want to get a commission on it? So that should be reason alone to do it, which kind of brings me to the third reason is I just think it's so easy. So like I know so many investors that like do so much business, and it's like, why don't you just take the time to get your license? Even if you don't want to be an agent at all, you don't want to market yourself, you want to advertise it, just do it for the commission.
Mhm.
It's a 75-hour course.
Mhm.
All in all, it probably costs you $1,000 after the fees and dues and stuff. Like it's not a big investment if you're really going to do it.
Mhm.
You have dues and stuff throughout the year, but if you're making money, it's nothing.
Mhm.
So why not? That's the biggest question. Is I would say to any active investor, like, just get your license and have it. You can get on the MLS then too.
Mhm.
Some people can't. So now you have access to the
Yeah,
properties and
that's the
tools.
best part. Yeah. Mhm.
Yeah, you have the MLS access, so you can
Mhm.
access all the properties that the real estate agents can use. Going to see them now, you don't need to bother an agent and go on. If you want to buy something that's on the MLS, you don't need to bother an agent. Your schedules don't need to align. You can just go on your own. So it's super easy. So it's a no-brainer to me.
Mhm. No, it's great points. Great points. Yeah, absolutely. I held my license really just up until last year because I'm completely invested in the my investment firm, of course,
Yeah,
and
you're
focused on that.
passionate.
So
Yeah,
yeah,
yep,
it's gotten to a point where I cannot do anything else but run this company. So
exactly.
but I got here because I had my real estate license, and like I was saying, so that really helped me learn this business. So great points there. MLS access can be very valuable as well. Although we do flips, and I was just I listened to Seth talk to the listing agent on one of our flips we're doing, and she's working her butt off, so
Yeah,
it's a lot of work, to sometimes be the listing agent, or obviously when you're buying a property, there can be an incentive for the listing agent, to work with you if you're like, hey, I'm gonna let you represent me. So sometimes in
yeah.
the commercial space, I would note that generally if you're represented by a different agent, your offer is not as well received by the listing agent.
Yeah, for
So
sure, for sure.
residential is a little different, but definitely
Yeah,
commercial.
it's a
Uh,
good trick to say, yeah, you get the owner to go with me, you can
mhm.
double dip,
Yep. You
for sure.
accept, get my offer accepted. You're my agent. Yeah. Well, you're my agent.
Exactly,
Let's get it going. Let's get accept
exactly.
what we need to do. Yeah. Cool. All right. So, what is it like working with a realtor when you're an investor?
Yeah, excellent question. So it's different. When I'm working with a retail buyer or seller, meaning someone who's not an investor, they're selling their own house, or they're just looking to buy their own house. It's so much different than I'm working with an investor. Now, as an investor, when you're picking a realtor, you got to really be careful with making sure you're working with a realtor who understands investors. So me being an investor myself, I think it helps a lot. I see it from their angle, and I know it's different. I treat them different. We do things differently. It's a very different process. So definitely, if you're an investor, you need to get with an agent that, they don't have to be investors themselves. I know agents who have been doing this a long time that don't invest at all, that they get it. They know what to do, and they do great with it. Um, I think one of the biggest things is you need to work with multiple realtors. And as an agent, I'm typically very much anti clients that are working with multiple agents. It's almost like they're cheating. But with an investor, I don't see it that way, because they're going to be buying many houses, so they shouldn't be forced to work with me and only me. Because even so, I can get more business from them than any of my retail clients that's going to buy one or two houses in their lifetime with me. So
Mhm.
when I work with investors, I'm always more than fine that they're working with other agents, because really it's who brings them the deal. So whoever's the agent that brings them the deal should be rewarded. And then
Mhm.
I like when the the investor will buy it with me, and then as a reward, for finding the deal, when they fix it up and sell it, they list it with me, and we have that kind of loyalty.
Mhm.
So that's always a great win-win relationship. I think investors need realtors who are gonna not just send them listings, but send them deals.
Mhm.
So, as realtors, we're kind of trained to, like, just send the houses that come on the market. This is the price, this is the
Mhm.
details,
Yeah.
let me know. But for an investor, that doesn't really mean much. They need to know, what is this going to sell for after I fix it up, or after I do this or that. So you have to be the one as an agent that finds the deals. You have to look through, and it's time consuming. And most listings are not good deals. They're
They are.
far between, that.
Yeah. Oh
You
my
know,
gosh. Yeah.
and
Yeah.
there's a lot of deals that go around that are called deals, and, like,
Right.
they're not. So you got to be able to help them figure out what the numbers are, approximate how much work it's going to need. Or if it's a rental property, you got to be able to tell them how much it's going to rent for. So then you're bringing value to the investor, because you're just putting it all on a plate for them. This is the deal, and then you take them and show them. So yeah, I think investors should be like loyal to realtors they find and understand they're bringing value, but they should have relationships with with multiple agents.
Yeah, exactly. Good agents. I mean, anyone good in business makes it easy for someone to do business with you, right? We
Right.
try to make the investment process very easy, understanding the investment opportunity and, everything as edible as possible, right? And easy to understand and enjoyable to digest, enjoyable to watch, or, and take that information in. So we offer videos, podcasts, all that stuff, webinars like this. So yeah, that's what it's all about, making business easy. So when realtors do that, they give you the numbers. I'm much more likely to move quickly on a property, when an agent or a wholesaler can send me good numbers on something, comps, things like that. So I always love when you send a deal out, because it does have all that information. You send resale comps to me, as the buyer. Yeah, I really like that. So that's nice, off the MLS too, not just like, an address and like a sale price. You actually send me like the comp that for that property. Very nice.
Exactly. Yeah.
Yeah. Okay, next question here. What are your investment goals?
Great question. So they're definitely lofty. Right now I have the 2-family that I live in. And like I said, I rent out the top. I have a 4-family and a 3-family that I rent those out, and they've been doing really, really well. I'm definitely ambitious with it. I want to do a lot more flips. So I have 2 going on right now. I want to do 5 this year. I want to ramp it up to try and do 10 next year, and eventually get to a point where I'm doing like 20 flips a year, which is a lot.
Wow.
But I want to do it. And then
like contractors.
I'm hoping to buy 2 more multifamilies this year. And then in the next 5 years, I want to have at least 20 in my portfolio. I like to buy 3 and 4 families. That was the advice I got from you years ago, and it stuck, and it really I like it a lot better than 2 families. I find you can get a lot more room to make the passive income each month. So yeah, that's what I want to do. I definitely want to start buying properties, like buy and holds that need a lot of work, so I can do forced appreciation, fix them up, and then I have extra equity, and then I can rent them out for a few years, and then when the value's gone up enough, I could sell it and buy 2 more by selling 1. So this way I can just grow my my net worth and the amount of equity I have. So that's the goal. And then a little side note, I've kind of been dabbling in the idea of buying a beach house, something that I could also do like the forced appreciation, like something it would have to be a great deal that I could fix up, and maybe like rent it out in the winter, and live in it in the summer, because it would be it'd be nice to have a beach house. So I think that's another element of house hacking, where I can if you can buy a property that you want as like a vacation home. Sure. Even if you like, you break even on the year, like that would be amazing, just something I can, have for myself, but also rent out when I don't need it. So.
Oh yeah, I have a property near Okemo Ski Resort that
in Vermont, right?
Yeah, in Vermont. Yeah. Yeah, and I love.
Yeah, and you do the same thing, right? But you do Airbnb, right?
Yep, we leased on Airbnb. It's a 2-unit. We actually, lived there for some time during the pandemic, for a long time. So
I remember that. Yeah.
Yep. And we had a number of properties up there as well for a time, but it was just way too much management. The apartment building space is a lot easier than doing Airbnbs and like single families and duplexes and things like that. But it was a great experience learning short-term rentals, building wealth up there. We did well for our investors. So at the end of the day, great experience. But yeah, so the Vermont market is interesting. Actually, it shot up from the pandemic.
Really?
Oh
Yeah,
my
people are getting
gosh.
away, right?
Yeah, New England really did very well. So I bought a couple properties in Vermont, about 4 or 5 years ago or so, and they have just the values there have gotten ridiculous.
Skyrocketing, huh?
Oh my gosh. Yeah, you used to, in Vermont, rural Vermont, you're like Okemo ski resort, I got a property on 4 acres for like 60 grand. It was a three bed,
Oh
two
my
bath.
God.
Yeah, like it's crazy what we ended up
Do
selling
you
it for.
still
So
have those?
I sold the single family on the larger lot. I had the duplex still. Yeah.
Nice.
Yeah. So we try to get up there like once a season. It's nice in summertime too. In fall, it's beautiful.
Right.
And I ski as well. Love those black diamonds. So
Yeah, that's awesome.
absolutely. So okay, last question here for you. What advice do you have for newbie investors?
Yeah, I love working with new investors. Love helping them and kind of showing them the ropes, like explaining, a lot of things that they wouldn't otherwise know. So because of that, I think they need to find a realtor who's experienced, and that could be such a win-win situation. If you find an agent who's going to help you and kind of protect you, like, that would be such a good feeling, to know you're not going to make a bad buy, because, this is a realtor who you trust, and they're going to make sure you understand the numbers and all the costs, because that's always, the biggest mistake new investors make, right? They underestimate the costs.
Mhm.
All of the different expenses with buying a home, as far as rehab and, the holding costs, carrying costs, closing costs, commissions. That's typically where, like, new investors go wrong, is they don't think of that. So I would link up with an agent who's gonna really help you. Like we talked about before, I think it's huge for a newbie investor. And there's, like, I wish I was new now, because there's so much information out there. Like, with social media, there's so many good accounts that you can follow. Bigger Pockets is awesome. They have, like, endless information, and
Yeah.
if you could find a mentor, but you got to always understand that you need to add value to anyone you're working with, or anything you're doing. It's like, what do you bring to the table? So
Mhm.
when you want to find a realtor, like, you need to make sure that agent understands, like, I'm going to work with you, like, I'm going to buy and sell a lot of properties in my career. So, like, if you help me get started, like, I'll really make sure I pay it back. I'm going to be a repeat customer.
Mhm.
So, always looking to help other people, even though you're the one that really needs help.
Mhm. Oh, that's great. That's great. Great advice there. Great advice. Okay, excellent, excellent. You want to switch over now? You can ask me the few questions there, and we'll
Sure.
talk a little bit more about my side of the
Yeah.
Q&A here.
So, interest rates are going up. We know that. So is real estate still a smart investment? With that knowledge, and why?
Sure. So, yeah, with interest rates rising, obviously you want to be aware of what's going on, and aware of the amount of debt you're taking on at that interest rate. But a bank isn't going to give you in the space we're talking about. So, what we do with buying apartment buildings, it's really a function of the revenue the building makes in contrast to the cost of the debt. So, as interest rates go up, the bank simply gives you a smaller loan amount. So you want to be aware of that. You also want to be aware there's going to be downward pressure on prices, right? So no one has a crystal ball. No one knows what the future holds. The Fed is expected to raise interest rates by about 50 basis points in June, and possibly 50 more in July. That's what they said. So we'll see, if that happens. And if it does, we'll see where rates go from there. But right now we're locking in about a 4.5 to a 5.5, depending on the loan type, which isn't terrible, really. I'm actually refinancing a property right now. It's appraising for an incredible price. We're getting to our appraisal values much faster. Instead of 5 years or 4 years, it's taking about 3 years now to get to that top refinance value and do the cash out refinance for our investors.
Right.
So, with values going up, and all the still upward pressure, which is the lack of supply of real estate, there's not enough housing in New Jersey. The demand is through the roof. So,
Right.
that's really causing values to go up, and still inflation as well. Inflation is still pretty high, and that's very good for real estate values. So that's two things moving real estate up. That's one thing moving real estate down, interest rates. So you just want to be aware of all that, not overbid for property. And we do price in a higher interest rate. We price in a higher cap rate, assuming the market is not as strong in the future. And we price in lower inflation at like 1% instead of 8%, which it is now, assuming inflation drops. So if you paint that scenario, then you're ideally paying the right price for real estate.
Right. That's so interesting. Yeah. So, I mean, you think really with rates at any number, there's always opportunity, right? One way or another.
Yeah. Yeah. I mean, of course, the rates go to sky high. We want to be aware of that,
to an extent.
and be really picky what you're doing.
Right.
Or looking at different ways to fund real estate. There's seller financing, there's equity plays where you bring in all the capital, you don't use a bank, so there's, rent to own where you can, I've put a property under contract and then secure the contract and title and then refinance the property and paid off, the contract amount. That's a pretty cool, there's tons of ways, but anyway, so yeah,
absolutely. I agree. I think there's always, if you're creative, there's always something you could do to make money in real estate in any market. So why apartment buildings? That's become your obviously your expertise and main area of focus. So why that instead of any other type of real estate?
Sure. Well, it's pretty simple. Everyone needs a roof over their head. I mean, I could probably end the answer there, but I'll go on for another 20 minutes if you'd like. No, I mean, listen, that's it. I like self-storage. That's probably, an attractive space as well. But the bottom line is people are going to pay for the roof over their head, before they pay for really anything else, like the, roof over their junk. Industrial's pretty strong right now. Warehouse spacing is good. But at the end of the day, I love apartment buildings. There's lots of financing options. There's a huge demand for it in New Jersey here. There's continued demand. Historically, there's just been a really strong investment, housing, residential housing, apartment buildings. Having a bunch of units under one roof is where it's at. I've bought a bunch of single family homes. I've fixed and flipped over 50 properties. I've done the smaller multis and even commercial lands. Really, in my opinion, apartment buildings are the best bang for your buck on the investment side. You're going to make the strongest returns more consistently over time. They're more recession proof than the single family housing market, which can take a big hit in a recession. Apartment buildings hold their value a little more. More people rent in a recession. So actually our rental prices tend to stay pretty decent, especially in North Jersey.
Right.
And listen, if people aren't paying their rent, and you're collecting all the cash flow on the property, if values go up and values go down, that's okay. You just maybe don't exit at that time. You don't refinance if values are down.
You just hold it.
Yeah. But where we buy, we see value growth and continued value over time. So.
Yeah, I love everything you said. And I think one is a good point where, when you tell people you're buying like, real estate, rentals, like apartment buildings or even multifamilies that you're renting, people say, well, what if the market collapses? And it's like, well, it's still going to rent. Renting's still gonna happen, and you're still gonna be able to, you can hold it. So yeah, like you said, maybe you can't refinance as you planned, or maybe you won't sell it as you planned, but it's not gonna kill you just to hold it. And as long as you're cash flow positive.
Yeah, that's why I don't do single families anymore, because I like stuff that cash flows, that makes a ton of revenue. So you just have so many more options at that point.
Yeah, for sure. So how do you go about finding discounted buildings?
Well, it depends on the market. We used to do a ton of direct mail marketing through really the first half of the 2010s here. That worked very well up until about 2019 or so, I'd say. We have snagged properties at sheriff sale auctions. There was a place and time for that where we did very well, made hay while the sun shined there. But these days, we're getting properties generally through brokers and wholesalers. We also have good relationships with landlords, so they'll reach out to us, who we successfully bought properties from in the past, and like doing business with us. So we'll get calls from them and try and stay in touch with them as well. But brokers are really where it's at right now. In commercial real estate, larger properties tend to be listed with brokers. The key is to have good relationships with them, we make sure our brokers just as well as we treat our investors. We really try to have a consistent relationship, go out to lunch once a year, something like that, and stay on their buyers list, the top of their buyers list. So most commercial brokers, they'll say to their sellers, say, hey, give me 2 to 4 weeks to market this out to my exclusive group. They're gonna, see that as exclusive and be really excited about it. And you might be able to get the price you're looking for just with all the buyers I have that, by the way, I know they're good buyers. I know they perform, and you want buyers that perform.
Right.
Instead, taking a risk with a buyer's agent and a buyer I don't know. So sellers will say, sure, that sounds great. And that's called a pocket listing. Essentially, they don't put it on the MLS. They don't put it on the internet. No one really knows about it except the guys on that list, right? So that's where you want to be. You want to be at the top of that list with the brokers that are moving the properties that you like.
Yeah.
And you don't get there overnight. You got to make them some money, close on some deals with them, and they'll call you when they got a good one.
Yeah, that's huge. That's why, like I said, I love, I always want to make sure I have good relationships with all the agents in the area, even different companies, whatever, because it's like you want people to trust you. You want them to know that, if you're buying it or your buyer, even if it's a buyer making an offer, like, you want to make sure that they know you're going to come through. So you always got to have integrity. I think it's important. Just build trust in your area. So why do you focus on New Jersey and not other states?
Well, we really have deep roots here in New Jersey, and we love this market for long-term growth. We understand Jersey has challenges. A lot of companies, investment firms choose not to invest in New Jersey because there is a lot of red tape. In fact, I always want to write a book called Red Tape in a Blue State. I'm working on that one. And so I'm thinking it's just, we have rent control that actually changes from city to city. Passaic has different rent control laws than Patterson, and so you just have to know your way around there. But listen, New Jersey is a hub of business and activity and people, the most densely populated state. There's a ton of wealth here as well. People have money for housing. The high cost of housing is okay because there's also high pay as well as tons of jobs. And there's a consistent demand to live within an hour of Manhattan. Even with the pandemic, there's still a demand for that. I think there always will be. In fact, the demand probably has gone more like 90 minutes from Manhattan now. So
right,
you might want to look more.
Just more spread out in New Jersey.
Central Jersey, West Jersey, maybe. The next markets. I shouldn't give away my investment strategy. Never mind.
I know, right? I'm with you. I don't think it'll ever change our proximity to New York City. I think we're always going to be a strong place to invest in. And it's rough. Our laws are so favorable to tenants. I mean, I don't know if it's should say it's rough, but as an investor, it's a challenge. And but even with that, I think it's always safe to invest here. So
you got to navigate the red tape.
Exactly. So this is a big question. Why would an investor decide to be or why would an active investor decide to become a passive investor? So someone who's active, who's buying their properties themselves, why would they turn to be a passive investor, meaning just, give their money to someone else and let them handle it? So,
Sure. That's a great question. Yeah. And, we have people like that all the time. People like yourself that flip houses, real estate brokers, real estate investors that own kind of smaller multifamilies. First of all, being a landlord kind of sucks. It's a tough job, even if you're managing a management company, it's a hard job. And it's nice investing passively. You get monthly updates and quarterly financials. Tax time is really easy. You get all your K1 right, mailed to you, emailed to you. You get checks in the mail. It's kind of fun. You get updates on what's going on with your investment and new opportunities through time. And so, it's really fun having someone else do all the work for you who are experienced professionals. And I try to teach people with my updates as well. So even active investors like, oh, that's a good tip on how to work with tenants, and how to reposition buildings, because we buy these mismanaged apartment buildings and there can be a lot of messy stuff going on. We have to go in there with our best foot forward and treat tenants the right way and work out amicable exits often, cash for keys, different lease negotiations. And sometimes it's not so pretty and it's definitely not easy. So you have eviction process and things like that happen as well with tenants that just are used to not paying the rent. So, there's a lot of challenges, but we renovate the building, we release it for top dollar, clean up the common areas, give it more amenities, make it a nicer place to live. So we do all this work. We explain how we do it through the process. People learn what we're doing. They earn money. They get cash flow. They get large checks upon the refinance. We're hitting returns right now in the mid-teens for annualized cash on cash returns. Generally getting 50% of our investors' capital back in the first 3-year period or so. And then they still own their full ownership in the property, and we will refinance again a few years later and still be cash flowing as well. So, just a gift that keeps on giving. It's this tax-free income stream because we write off our cash flow with tax depreciation. And then we pay also our investors to do the refinance, which is where the majority of the return is realized.
Right.
So, overall, the whole investment doesn't create any more tax burden. And, house flippers, one of the reasons I stopped flipping homes is because if you get really good at it, you're in business with the government. Now you pay them 38% of what you're making,
Right.
or 25%, depending on how you pay yourself. So,
Right.
but at the end of the day, flipping houses can be profitable. It's highly taxed. It's not a lot of tax shelters when you're flipping. So, hopefully you run into that problem. I'm sure you already are.
Yeah.
And right, it's a good problem to have, although it sucks.
Exactly.
The first year I made 6 figures as an agent and paid the government, a big fat check, which I really couldn't afford. Like I had to oh shit, I save up money. I was like, I don't have this money, right? Because as a realtor, you'll make dough through the year.
Exactly.
Build this lifestyle around
You're
it.
like,
And it's like, oh, you the government $20,000, so
they
it's
just slap you. Yep.
yeah. So
Exactly.
I learned that lesson as a young man, not being prepared for that. So that's why I own real estate, so I don't pay taxes. Essentially, I pay myself through refinance of real estate. I don't pay myself a salary. I do take partner draws here and there, but for the most part, my tax rate is effectively zero. It's really incredible. So,
right.
Because I play the tax code the right way.
Yeah.
That's kind of what we teach as well. So I think people enjoy that. So listen, it's a different space than house flipping. It's a different space than buying duplexes and quads and and there's money to be made there. That's a great business. It's an awesome way to make a ton. I know guys making millions of dollars a year doing that. So, they're far more successful than I. So that is the way to do it. But then put some of that cash into passive investments because you don't have the time to do what I'm doing.
Right.
Our whole management system, our whole stuff. There's no way you could
that
do
are
it.
working like crazy and they're making money, but they don't have the time to invest actively. So that's
or you continue investing actively, and you're still do whatever you do. Maybe you're a doctor or a dentist or whatever you do. You're working. We're busy. We have kids. We have families. So we have jobs. So you don't.
So there's no reason just because you're actively investing that you can't passively too. You can.
You already believe in real estate. You already understand it.
Right.
So teaming up with professionals could be a way to get your game to the next level as well, your business to the next level. So,
absolutely. Cool. All right. I think I have one more question for you of my own that will benefit from it. But I'm planning to take on property management for the first time. With my properties, like you said, landlording is not fun. What advice do you have? Because everyone thinks, all right, I have property management, I'm done, I don't need to worry about it. But I'm sure that's not the case. I'm sure you still need to be somewhat active in a way. So what advice would you have for someone that's using property management, to still stay on top of their investments?
Sure. Well, property management is what it's all about. That's why we developed an in-house property management company. Right. That's why we fired 3 of them. That's why we took one to court because they were stealing from us.
Right.
So, man, I've been through with property management, and
I've heard a lot of horror stories.
Yeah. Oh my gosh. Yeah. So
I think I found a good one. We'll see, but
okay. I thought that as well, and I had one okay one, but it was kind of like I just felt like a number on a screen. Like they kind of we'll do our best. We'll put it on. Oh, you want to lease the apartment? We'll put it on the internet for you. We'll put it on the internet. Okay, don't worry, it's on the internet.
Right.
So that was it. But I mean, at the end of the day, management of real estate is extremely difficult. It really is. And repositioning apartment buildings is even more difficult, right? So the question is like, what are you really doing? Are you buying like mismanaged, income properties, and you're expecting a management company to like, remove non-cooperative tenants, renovate vacant units for like a great cost quickly, lease them for top dollar, figure out more ways to make income on the property, other ways to lower your expenses.
Right.
You're not going to get that from a management company. I don't care who it is. That's why we developed
not realistic.
Yeah, it's
right.
not easy. They're not going to make money if they did all that. There's no way because I know I own a repositioning company.
Right.
We don't make money that way. We make our income comes from the ownership of real estate, and we get paid when our investors get paid when we perform. And that's how it works. So management of real estate is good if you have a nice turnkey property. Collect the rent when it's due, call a plumber when a pipe leaks.
Right.
Yeah, that's pretty good.
Just the basic property management, activities is what you could depend on it for. So that makes sense.
Absolutely. You still have to keep an eye on it. I have a management company, for my Airbnb property, and I keep an eye on it. There'll be things that slip through the cracks, and like they're not, they never check all the boxes in my opinion. I guess I'm just hard on management companies, but like,
no, that's fair though. I mean,
like someone will write like, hey, I want to stay for these months, and they'll be like, okay. And like what the person is asking is like, what do you think you could do for that? Kind of sell me a little bit, right? Sometimes you got to sell a thing. So what I found was like the leasing side of real estate is best done by leasing agents or people that are really good at leasing. Okay? The management of real estate, taking the service calls, is done by someone who's very analytical, very good at organization, timing, scheduling things, same things, kind of collecting rent, things like that.
Exactly.
So they're very different. Selling a thing is what I do. Sales is sexy. It's personal. I build relationships with people. We get to know each other. We know our kids' names. That's not what property management is, but there's a whole other side of it that's really, really important. Organized. So I'm really getting into property management here. I'm digging deep, man. But so you have leasing, you have like rent collections, you have like organization of paying bills, and and then it's a whole other level deeper, like recognizing how to make more forms of income on the property, which is always going to be the owner's job to kind of manage that management the right way. So
and even doing your books too, because they'll do that also, right?
Yep, bookkeeping,
your accounting,
really important. Yep.
Of
course. But you got to be careful with that, right? Because now, I don't know, if I had a third-party management company, like most syndications do, they'll raise capital, they'll build relationships with investors, and then hire a third-party management company 5 or 6 states away, investing in an emerging market. It might be a great investment, but at the same time, you're hiring this third-party company, essentially run your entire business, but your name's on the line with the fundraising. So that's the great flaw in the real estate syndication space, is that 90% of syndications don't have in-house management. The very definition of syndication is just like pooling capital and buying property. It doesn't go on to be like you're going to develop a repositioning company and figure out the project and execute over a 5-year period. It's like, you raise the money, you buy the building, you hire the management, you call the investors when the money's ready.
Exactly.
And that form of syndication never made sense to me. So I think it's important to have control of your assets if you're a syndication company like ourselves here. And that's why we developed a repositioning management company. And I was not pleased with the 3 management companies I had fired previous to that.
So you had to take it over.
Yeah. But listen, I could suggest one, Crown Management.
Vanessa, that's who I'm going with.
I love Vanessa. She's great. If I were to, hire a management company, it would be Crown Management.
She seems like really, really good. So I'm excited.
She's great. I'm speaking at their event on the 16th, so I'm excited for that.
Oh, nice.
Vanessa's a really good property manager, and I think you'll be in good hands there. So cool. Don't tell her I said all those nasty things about property managers.
You made me feel more comfortable. So I'm
she's the best you get.
At least she's got your blessing, so that's good.
Mm-hmm.
Nice.
Excellent. So
Cool.
that's Crown Management for our listeners. If you're looking for a
Yeah,
good manager,
give them a little plug.
yeah,
Yeah.
give them a little plug there. Excellent. Excellent. Are those all the questions on the list there, my friend? You want to look?
I think that's all I had. Oh, one more. So the bidding wars. We all know lots of bidding wars, the last 2 years, at the minimum, since COVID has been crazy. So how can investors who are really frustrated with this, how can they put their money to work with all this competition?
Sure. So yeah, bidding wars are crazy right now. There's a lot of competition in the smaller real estate space. There's still a lot of competition there, and there's still competition in the larger commercial space as well. But I have to say, as interest rates rise and the temperature of the advice we're getting, or the advisement from the Fed of interest rates rising even more in the future, commercial real estate has actually tampered down a little bit. And we're finding that for the first time in a while, it's a little bit like a buyer's market, which means the buyer's in control, and we're able to negotiate pretty much on our terms. And not completely yet. It's probably kind of an even point, because the buyers are like, are we the only guy in this room? Or are there other people there?
You don't believe it.
Yeah, like, you're coming back on my offer? Okay. Like,
Right.
And so we're just so used to being denied and overbid as buyers, residential and commercial, that now, hey, I'm in the negotiation right now on a $10 million acquisition, and we are kind of in the driver's seat for the first time in a long time. So it's looking really good. I think we're going to get great terms on it and execute very nicely on it. We'll be putting together about $4 million in capital there from our private investor group. And for our listeners, by the way, you can go to peoplescapitalgroup.com and learn more about us there. And you can click a button that says qualified invest and connect with us there, and learn more about our upcoming opportunities. But that's what we're focused on right now for the first time ever, man. It's awesome. So we're really looking at a good price here. Finally, it's a kind of becoming a buyer's market. And that was what the Fed was trying to accomplish with rate increases. So what that tells me is, right now, I think it's working. And I think we're not going to see a crazy increase in rates. We're probably going to tap out around 6, 7. I don't see anything like 12 or happening.
No, I agree.
And so there's always going to be naysayers and fear mongers, but for the most part, I think it's going to be a bit of a buyer's market. So get ready for that. Buy, and just make your good decisions. But if you're in a bidding war, don't overbid, don't overpay. Be smart with your terms. Sometimes terms are better. I get properties for great prices all the time by having strong terms, but not such a great price. Right? So I'll say, I'll close really quick, or I'll put up a large deposit, or I'll do no inspections, right? No inspections. I'll get them done when I'm in attorney review. You need inspections done in 3 days? Whoa, that means you're really got your stuff together,
Exactly.
And you got some cojones. You're going in there, no inspections. You're like, I don't care. I got the money. It's down hard. I'm going to close, but this is my price. People still react to that, and as a buyer's market becomes more prevalent, I think that's going to get even a better price on the properties. So that's how we get good deals. Oh, did I lose you? Oh, Alex, I think.
Hey.
Oh, there you are. Okay.
I'm seeing it too in residential. I've seen a slowdown since the rates have.
I think we may have a little connection issue on your side, Alex, there. So I'll give you a couple seconds here, see if you come back. Oh, there you are.
Okay. I was just saying, it's still a seller's market here, but in residential, but I've seen a slowdown. So the multiple offers has been a little lighter than it was. So that's good. It's refreshing.
Well, hey, that means the system's working, right?
It's working.
Right, that's it. And it was supposed to happen. We needed the party to end. There needed to be some adults in the room, and that's what the Fed.
Exactly.
So.
Yep. It's pretty cool to see it work,
Yeah, there you go. There you go. The American dream is real. Right.
Exactly.
Excellent. All right, good. So it's about 8 o'clock here, so we'll wrap up. I think we covered a lot tonight, and we talked about house hacking. We explained what house hacking is, and how we both did that properly, I'd say, and helped us
Yeah.
get started building our wealth in real estate. I enjoyed learning about your end on buying properties and kind of investing in the smaller multi-space and single family homes, which there's a ton of wealth to be made there.
Yep.
And then I focused more on the apartment building side and repositioning apartment buildings and property management. And of course, that's a whole other realm of real estate where people get passively invested, ideally through a real estate syndication. That's what we are, People's Capital Group. And our website's there in the chat, and Alex's website as well. And Alex, how can you help people?
So I work with residential buyers and sellers. So I help people buy and sell any type of residential in the Central Jersey area. I cover Somerset, Middlesex, Union, Hunterdon, even some of North Monmouth and North Mercer. So reach out to me. My link tree has all my links, and I love working with investors. If you're looking to do flips or buy your first multifamily, definitely the guy to reach out to.
Excellent, excellent. Yes, so if you're an active investor and you're looking to buy properties yourself and take the plunge and sign the dotted line for the mortgage and work with the contractors and own it more so 100% or whatever your structure is, then you would be calling Alex, investor-friendly realtor to buy real estate actively with. If you want to just invest passively and have us do all the work and get into the apartment building side of the business and earn returns in real estate without having to do the heavy lifting, then that would be People's Capital Group there. And that's my link, peoplescapitalgroup.com. So there's no right or wrong way to do real estate. Like we said, a lot of people do both. In fact, that's what Alex and I do. We both do passive investing and active investing. So we both enjoy both the benefits of real estate there. And really, you should be doing a little bit of both. There's nothing wrong with that, right?
Exactly. Exactly. Yep.
Absolutely. Absolutely. Okay, very good. So thanks a lot for your time here, Alex. Thanks a lot for everyone jumping on. I'm glad that they could join us here. We saw a number more people jump on towards the end. Excellent to see all the demand here. And of course, our information is there. You can join up with our team. And if you have any more information, you can also email us at info@peoplescapitalgroup.com. But this will be on our Facebook page. This will also be sent out on our email list as well, which you can jump on if you go to our website, peoplescapitalgroup.com. But that's it for tonight. Thank you for joining.
Thanks, Aaron.
See you, bud.